Net 30 payment terms represent one of the most common credit arrangements in business-to-business transactions. These standard payment agreements form the foundation of commercial credit relationships and help businesses manage their cash flow effectively. Understanding how Net 30 terms work is essential for anyone involved in business finance, whether you're a buyer managing accounts payable or a seller extending credit to customers. Net 30 is a payment agreement where the buyer receives 30 days from the invoice date to pay the full amount owed to the seller. The term net means the full invoice amount must be paid without any deductions. When a seller issues an invoice with Net 30 terms, they're essentially providing the buyer with a 30-day interest-free loan. This grace period allows the buyer to receive goods or services immediately while deferring payment for a full month. The Net 30 process follows 3 straightforward steps. First, the seller delivers goods or services and immediately sends an invoice to the buyer. Second, the buyer enters a credit period where they have 30 full days to arrange payment without incurring penalties. Third, by day 30, the full payment amount must be received by the seller. The 30-day countdown typically begins on the invoice date, though some agreements may start counting from the delivery date instead. While Net 30 is the industry standard, businesses use various payment term lengths depending on their needs and industry practices. Net 15 requires payment within 15 days and is common for smaller transactions or newer business relationships. Net 30, the most popular option, provides a full month for payment. Net 60 extends the payment period to 60 days and is often used for larger orders or established customers. Net 90 offers 90 days to pay and typically appears in industries with longer production cycles or for very large transactions. Many sellers incentivize faster payment by offering early payment discounts. A common example is 2/10 Net 30. This notation means the buyer receives a 2% discount if they pay within 10 days. Otherwise, the full amount is due in 30 days. For instance, on a $10,000 invoice with 2/10 Net 30 terms, paying within 10 days saves $200. These discounts benefit both parties. Buyers save money while sellers improve their cash flow by receiving payment sooner. Net 30 terms provide significant advantages for buyers. First, they improve cash flow management and working capital by allowing businesses to hold onto their money for an additional 30 days. Second, buyers gain time to generate revenue from purchased goods before payment is due, which is particularly valuable for retailers and distributors. Third, consistently paying on time builds business credit history and strengthens supplier relationships. Finally, Net 30 terms are standard industry practice for business-to-business transactions, making them an expected part of commercial operations. Sellers also gain important benefits from offering Net 30 terms. Providing credit attracts more customers and increases overall sales volume, since many businesses prefer suppliers who offer payment flexibility. Net 30 terms encourage repeat business and foster customer loyalty by making transactions more convenient. Offering standard payment terms provides a competitive advantage in the marketplace, especially against competitors who require immediate payment. Most importantly, extended payment terms help build long-term business relationships based on trust and mutual benefit. Several important factors must be considered when using Net 30 terms. Late payments can significantly damage business credit scores, making it harder to obtain credit in the future. Sellers typically charge late fees and interest on amounts unpaid after 30 days, which can substantially increase the total cost. Always document payment terms clearly in writing as part of the purchase agreement or invoice to avoid disputes. Both buyers and sellers should track invoice dates and payment deadlines carefully to ensure timely payment and maintain positive business relationships. Proper management of Net 30 terms is crucial for successful business operations.
If you like this video, hit that like button and don't forget to subscribe. Visit codelucky.com for more such useful content.